All right, good afternoon, everyone. A very, very, very good afternoon. Right now, it is 3:50 p.m. England Standard Time and 14:23 hours Dubai Standard Time. A very warm welcome to each and every one of you present for today's second live streaming session. Before we continue with today's live streaming session, let me make sure that people are able to hear my voice, and I hope people can see me, and there are no technical glitches taking place. All right, I think we are good to go. All right, let's start today's second live streaming session with a quick introduction about the one and only Harsh, correct? So, I am Harsh. I have 8 years of trading experience. I trade the Forex markets such as euro dollar, pound dollar, dollar Swiss, as well as I trade the commodity markets such as oil, gold, silver, copper, as well as the US based indices. We have indices such as S&P 500, Dow Jones 30, and the Nasdaq 100. We are also looking at the Indian share market, whereby we analyze the Indian indices, the blue chip indices such as the Nifty and Sensex, as well as we look for trading opportunities in various individual Indian stocks as well. So I am more of a technical trader. I specialize in technical analysis such as supply and demand, price action, order flow analysis, swing analysis, wave analysis, as well as Fibonacci retracement analysis. When it comes to technical analysis, the list is quite exhaustive. There are so many different analysis or types of analysis, right, within technical analysis. So, but these are the major forms of technical analysis that I specialize in. I have been blessed to be mentored, to be guided by some of the best minds in the financial industry. I have been trained and been, nourished by some of the best minds of the financial markets. I'm talking about people who used to work as flow traders on the Chicago Mercantile Exchange. So I have been truly blessed and I'm fortunate enough to gain experience and exposure from such bright minded people. I also have been successful in managing $20 million worth of portfolio and have been successful in generating around 30 to 35% of profits on an annual basis too. The reason I am telling you and showcasing you my qualifications, my accomplishments is so that you can be rest assured that you are, you are listening to someone, you are learning from someone who has the knowledge, the experience, and the expertise when it comes to the financial markets. All right, here we at Dolphin Markets are having these live streaming sessions with the main focus, with the main goal of making money. And how can you make money in the financial markets is by following our step by step and structured process when it comes in terms of taking trades. So as you can see, we always make sure to start our live streaming sessions with the main motive, right? We have a clear objection when it comes to why are we having these live streaming sessions in the first place, correct? So the main crux or the main goal behind having these live streaming sessions is to showcase everyone, whoever are viewing our live streaming sessions, that yes, we have been consistent and diligent when it comes to providing you trading opportunities all the way from 18th of September till 7th. So there are many people out there who still ask and are wondering, is it really possible to make money in the financial markets? Let me ask you the question. Do you think it is possible to make money in the financial markets, or do you think it is not possible? Come on, you can write down in the comment box. I want to know what are, your opinions when it comes to either it's possible to make money or if it's not possible to make money. I'm pretty sure that a lot of you would be aware, or I can connect to you at a deeper level, so I'm able to understand you. And I know that people would be saying that yes, Harsh, it is possible to make money in the financial markets, but maybe we do not know how to make money in the financial markets. Maybe we do not have the right knowledge, the right mentor, right? We do not have the right guide to help us navigate the financial markets. And that is exactly what Harsh at Dolphin Markets is providing to you. We are providing you with money making opportunities in terms of entering trades and closing trades in terms of making profits, correct? When you're making profits, you are making money. We always are emphasizing on our financial analysis sheet, right? It mentions the date, the trading. We call the trading opportunities as hot stock recommendations, correct? So the hot stock recommendations, the opening time, the direction of the trade, and the price at which we had provided to enter, correct? Once the trade starts to run in our favor, we also provide you with when the trade was closed, at what price level the trade was closed, and how much of profitability in terms of percentage we had been able to make. So as you can see, all the way from 18th of September to 7th of November, we have been consistently providing you a profitable, a profitability of 5% on an average, right? So you can be rest assured that we are not people who are just, talking in the air. We are proving it to you on a real time basis. We provide you all the required variables that are needed. All you have to do is just make sure that you are present during the live streaming sessions, and when the markets are open, that is the time you keep your trading account open as well. And the moment Harsh is having the live streaming sessions going on, all you have to do is place those same trades on your brokerage account, and you will eventually see that you will be making good amount of money. We aren't talking about one or two trades that have been able to generate profits. We are talking almost trades taken from 18th of September. Today being 15th of November, we are very much closing down to 2 months, correct? So in a span of less than 2 months, because we still have 2 months to cover up, in a span of 2 months, we have taken almost 34 trades, and we have been able to generate a cumulative profitability, a total profitability of 135% as of now. That just showcases the power and the value that we are able to provide to you. All right. Today being Guru Nanak Jayanti, the markets had been closed. Generally, the first and the second live streaming session is based on having opportunities. We look for opportunities in the stock market, but since today's market had been closed, our focus had been shifted from analyzing for trading opportunities to education. We were focusing today mainly on technical analysis, right? Especially pertaining to Forex and the gold markets, correct? These days, when the markets are closed, it is a boon for us, right? Because we are able to provide you with more learning content. Yes, we want you to make money, we want you to earn, but we also want you to learn. So you can combine the best of two worlds, and you can be, at a very good level of understanding where, yes, we know what things are working out, how are things analyzed, how are markets analyzed, and yes, we have trading opportunities where we are making money. So if you're getting the best of the two worlds, that could be the most valuable service that anyone can be providing to you. All right. So we have trades that are booked at a profit, and these are the variables that are showcased. We also have trades that are running. These trades that are running are been planned and have been provided to you on a real time basis. As you can see, in terms of yesterday, we had provided to you a trading hot stock recommendation on RBL Bank just yesterday. Today is the 15th of November. This particular trading opportunity or hot stock recommendation was provided to you on 14th. That is yesterday. We provided you with the entry level, we provided you with the 5% profitability level, as well as target 1 and target 2 levels. Remember, since our main goal and our main focus is to showcase our potential, to showcase our strength of making profits in the financial market on a consistent basis, we have analyzed and we have figured out that the 5% profitability level for achieving targets is practical and can be performed on a consistent basis, right? So that is the reason we provide you with the 5% target, and majority of our trades that we have taken in the past have been based or have been closed, sorry, have been closed at 5% profitability percentage. Remember, we are focusing on generating consistent returns, right? We do not want to take one, two, or three trades and hope that it can make 10%, 20%, 30. Rather, we look for opportunities on a daily basis, correct? As and how there are opportunities that the markets are providing us. We analyze the markets, and the moment we are aware of a hot stock recommendation, we provide it to you at the earliest, right? So you are getting trades to take, and as well as you are able to make profits, you are able to make money consistently, correct? So we have trades placed. So these are all values that are taking place on a regular basis, right? We do not have trades where we are boosting about taking trades maybe in the past month or the past year. No, these are happening consistently all the way from 18th of September. Being it's been 2 months, and as you can see, we have been quite diligently and quite meticulously maintaining our financial sheet so that people can be aware that yes, Harsh and Dolphin markets are very consistent, are very, have maintained a very descriptive and elaborate uh, details that are required for entry and exit. Once a hot stock is recommended, all you have to do is place the trades on your brokerage account, right? And the moment the prices are coming towards target area, you will be notified either by me during the live streaming sessions or by my assistants, who will provide you with a reminder, who will provide you with a notification if the prices are coming to the 5% target outside of the live trading sessions, correct? So do not worry, you are getting the best of everything, correct? Many people are asking, Harsh, what is the real goal of having these live streaming sessions? And to those, I want to say the main goal for us to have these live trading sessions is to provide you with the value of making money so that you can make profits, right? And if you can make profits, you can believe that yes, Harsh as well as Dolphin markets are truly, you know, trustworthy, and yes, we should be a part of dolphin markets as well. We want you to make money in the Indian share market, and we want you to make money in the international markets, correct? The Forex and futures market. Remember, dolphin markets has just entered into the Indian territory, into the Indian market, and that is the reason why we are showcasing our credibility in terms of generating profits in the Indian share market. We at Dolphin Markets are already established internationally. We have branches in Hong Kong, in Australia, and in United Kingdom. So we are quite well established internationally. We our main expertise resides in in the international markets, the forex and gold and CFD markets. So you can be very well rest assured that if you are getting such good profitability values, ratios, percentages in the Indian share market, you can be making much more in the international markets, correct? In the forex, gold, and CFD markets. Today morning we had talked about technical analysis. We had started with a brief discussion in terms of what exactly are candlesticks, and we started building momentum from there. We talked about support, resistance, we talked about trend lines, we talked about channels, We talked about double tops, double bottoms, head and shoulders, inverted head and shoulders. We talked about so many things. Then we even talked about certain indicators like the moving average, right? Everyone is aware of what the moving average is. We even, we even looked at double moving averages where we are getting the confluence of not one but two moving averages, where we had explained to you what a golden cross is and what a dead cross is, and it was very much informative for people who have been watching this particular live streaming session. All right, so now moving on, let me cover up with the other concepts as well, right? So we had covered, in terms of indicators, we had only covered the moving average and the double moving average, right? I had mentioned it to you that for people who want to use more than one or two moving averages, there is an indicator called as ribbon, right? So maybe if I type multiple moving averages, let me just search it. So we have something called as multiple moving averages, not one, not two, but more than two, right? Here we have five, one, two, three, four. So four moving averages. The more the number of moving averages, the better the confirmation, right? So when we have certain scenarios where we have prices, crossing against each other, and depending upon which direction the price is based on those moving averages, you can clearly see when the moving averages had intersected and when prices were above the moving average, the prices were bullish, right? And when the intersection took place and when prices were below, the prices had a bearish movement, right? So we had a bullish movement and we had a bearish movement. So as and how more number of moving averages are added, yes, you do get more confirmation. But again, everyone, remember, the markets do not run on certainties. The markets run on probabilities. So there are there are many probable ways of analyzing and looking for opportunities in the market, correct? Whether the Indian stock market or the international market such as Forex and gold. So currently, as you could see, with multiple moving averages, the more number of moving averages, the better the confirmation, right? So these are moving averages. We covered about single moving average. We covered about double moving average, which was basically consisting of a golden cross and a death cross, correct? And we even looked at multiple moving averages. So let me delete everything. Let me remove the indicator. I hope you all are having a great afternoon. Yes, today being Friday, the 15th of November, everyone is excited about the weekend. Everyone is making plans for the weekend. And people who are at work, I can already see a sense of enthusiasm, a sense of excitement that yes, now the weekend is just a couple of hours away from, uh, is just a couple of hours away. But nonetheless, right, I say to all my viewers and I say to all my clients that when Harsh is here, there is nothing to fear. This is the opportunity that we are taking to provide you with more information pertaining to technical analysis, right? So like we were talking about moving averages, let us talk about moving average convergence divergence, right? MACD, or generally people call it or refer to as MACD. Do not get confused with McDonald's, right? Because when we go to McDonald's, we have a habit of saying, let's go to McD's, correct? But here, our MACD is not the McDonald's that you're thinking about, but moving average convergence divergence, right? That is the full form of this particular indicator. Now, as we had used the moving average, right, as a tool, as an indicator to give us a clarity in terms of what the markets are showing. Are the markets bullish? Are the markets bearish, or are the markets neutral, sideways? So with the moving average convergence divergence, we are able to to project in terms of what is the possibility of prices to do, so let me give you a quick understanding of how we utilize the moving average, and when we compare it to the chart, how the moving averages are looking. So in simple terms, let me keep it as simple and as understandable. I do not want to complicate it unwantedly. So the MA series basically is having two components. We have a histogram and we have moving averages. We have two moving averages. So let me use the arrow to talk more about it. So the histogram, let me change the color, otherwise people will get confused with green. Let me put it to orange. All right, I hope people can see my screen, correct? Perfect. All right. So the moving average, convergence, divergence, right? I'm just going to call it as MA series. So the MA series has a histogram and the MA series has two moving averages. So when the histogram is green in color, when the histogram is on the positive phase or the positive plane or the bullish territory, there are many terminologies when it comes to the moving average to the MACD indicator, but let's keep it simple. When it is in the green phase, right? When it's in the positive territory, or let's just call it as green phase and red phase. So when the MACD is in the green phase, generally there is a depiction that prices are in a bullish, are in a bullish trend. When prices are in the red phase, correct, that indicates that maybe prices would be having a bearish sentiment. Now that is just the overall depiction of the green histogram and the red histogram. But now looking at the moving averages, a simple way to analyze the markets by using the MACD is, if the histogram, right? Histogram is the color green and red. So if the histogram is in the positive territory, right, in the green territory, and the moving averages are above, the moving averages have crossed and are above, right, in the plane of the color that is denoted on the histogram, the general consensus is that prices will be bullish, right? Let me just use a trend line to depict. All right, and let me put a vertical line as well. So when the prices are, I hope people can see the screen, correct? So when prices are in the green territory, correct? When the histogram is in the green territory and the moving averages have intersected and are also in the green territory, the general bias is that prices will continue to the upside. Now, similarly, let me find you another scenario where the histogram is in the red territory, is in the bearish territory, right? I'm just marking. Let me put vertical solid lines because it will be easier for you to be aware of what I'm talking. All right. So as you can see, this current phase, when it is in the green territory or the bullish territory, the prices have been in an uptrend. Similarly, when the prices are in a bearish territory, right, the prices are generally having a downtrend sentiment. Let me draw a line. So people should understand that yes, during such market cycles, MACD is quite an interesting tool if you really think about it, because MACD gives you an indication in terms of what is probable for prices to do, but not just the histogram. We have to see where the moving averages are also when compared to. So in terms of the first example that I was talking, the moving averages had crossed and were in the positive plane, in the green plane of the histogram. And that is how you could see prices appreciating. Now, when we were looking at the other example where prices were in the negative plane or the red plane, right? When the histogram was red, and the moving averages had crossed and had entered from bullish phase to bearish phase, right? That is the time when you could see prices are correcting. So in a crux, this is the overall explanation of an MACD. Now there are people who are like, but we heard about MACD and divergence. So do not worry, we will be talking about that as well, correct? Many people would be also asking, Harsh, what is MACD and divergence? because in the full form of MACD, it's called as moving average, convergence, and divergence. So, what is moving average, convergence, and divergence? And divergence. So, let me explain to you what the entire concept of divergence using a moving average is all about. All right. So when it comes to moving average, convergence, and moving average, sorry, MACD and divergence, right? The concept lies in the fact that when we are having a scenario where prices are appreciating in value, all right, let me use the arrows to depict it. As you can see, when we have a scenario where the moving what you call the pivot or the phases of the moving averages are creating like a double top, right? Just try to understand. It might sound a little intimidating, but it's not. All right, it's simple to understand. When you have certain phases where there are two peaks in terms of the MACD indicator, and at the same time you have two peaks on the price chart, right? So you have two peaks, right? Peaks are basically pivot points, right? So you have two pivot points on the price chart, as well as you have you know two peaks on the indicator on the MACD, and these are divergent. As you can see, the direction is quite clear. We are not talking about prices going parallel or convergent. We are talking about diverging, correct? So as you can see, prices are diverging, right? The prices are diverging, and the moving average, the MACD, is also like they are separating, if to say so. This generally indicates that once a divergence is created on the MACD and on the price chart, you have a scenario where prices continue in the opposite direction, right? So in terms of having a pivot and a higher pivot, and in terms of the MACD creating a pivot and a lower pivot, so you have prices going up and you have the MACD going down, correct? Now, this is when you call it as divergence, right? Yes, do not get confused with the full form of MACD. The full form of MACD is moving average, convergence, and divergence, correct? But we are talking about MACD and divergence. So, when we have such a scenario where pivots are being created, right, as well as a contrary effect is happening on the indicator where you can see visually a divergence is taking place, that indicates that prices will start to reverse, and that is exactly what is called as MACD and divergence. I hope people are able to understand. Every streaming session that we are currently having, we are trying, since morning we had started with the basics of what a candlestick is. How does a candlestick look? What is a red and a green color candlestick and all its characteristics? And then from there, we started to build up slowly in terms of what are the basic trading strategies when it comes to technical analysis, and we kept improving and making it more advanced. So now we have entered into mid to advanced level technical analysis, right? And MACD divergence is a very good example. I hope people are able to understand. I've tried to explain it in the most simple language possible, right? So this has been more about moving average, MACD, right? MACD as well as MACD and divergence. Now let us look at the third indicator that we would be focusing on, and that is going to be pivot points, right? Now pivot points are quite interesting. Now I hope people can see my screen. Let me just quickly change the color to some of the settings that I have been using. So basically, I am only changing the color of support, right? And I'm changing the color of resistance. Support is a floor, resistance is a ceiling. So I'm going to denote support in green color, and I'm going to denote resistance in red color. And I'm only going to be looking at three support levels and 3 resistance levels, with P standing for pivot. Pivot is the midpoint of that particular price for that particular day. All right, so let me click on OK. And now that you can see, we have pivot points with support levels below the pivot point and resistance levels above the pivot point. Now I do not want, it might look complicated, but do not worry, I will try to keep it as simple as possible in terms of explaining. For people who are aware about pivot points, very good, but for people who are not aware, let me just give you a quick introduction in terms of what a pivot points are. Pivot points are calculated based on certain mathematical formulations, right? When it comes to pivot points, you have the traditional or the classic pivot points, you have the Fibonacci, you have the Woody. All right, traditional and classic. You have DM, Camarilla. These are very, very advanced level calculations which are based for calculating the input levels for the pivot points. Let us keep it simple to traditional or classic. You can decide between the two. For now, I'm going to be using classic. Now, what a pivot point suggests. All right, pay attention because it is very important. A pivot point is nothing but, having three different segregations of line. The first remains the midpoint, that is the pivot. Then you have resistances which are above the pivot and support levels which are below. Anytime prices are coming closer to the support areas, there is a higher probability for prices to, respect that particular pivot area. So as you can see, we have this particular indicator which showcases a lot of data in the past. The reason I have kept, you can go to the settings and you can, you know um, show it in terms of whether you want to see historical data or not, correct? But nonetheless, we just want to focus on how we are able to, utilize the pivot points into, making our trading judgments in terms of helping us analyze the markets from a better perspective. So pivot point is the midpoint followed by supports, where whenever price comes to support, like you can see over here, currently we have the pivot at the pivot point is the midpoint, right? Do not get confused with the terminology of pivots and pivot points. Pivot points are, these are the indicator that is being used, and pivots are just the midpoint of that particular trading range. All right. So we have P1, R1, we will even have R2, and we will have R3, right? For resistances. When it comes to support, we have S1, S2, and S3. Generally, if you notice, whenever price comes to an area either at a pivot or at a support, there will be, some kind of reaction. There are times when prices are reacting quite well to these pivot points, and sometimes they work perfectly, right? Let me show you some examples in the past where prices have done that. The moment prices had taken out the pivot point for that particular time period, the price one, and the best part, the significance of pivot points are, if price closes below or above a particular price point, basically above a pivot or a support or a resistance, it will go to the next. So as you can see in terms, I hope people can see my mouse, correct? So where prices are currently, where my mouse is being showcased, that had been the previous pivot, right? And once prices break above, they go to the next pivot point. So this is the added value that, pivot points are able to provide. So you could see prices broke pivot, came to R3, then prices got held and got, pushed prices lower. These are certain benefits that the pivot points are providing to us. Similarly, let us go a little into the past and see. Similarly, we had it somewhere around 15th of April. Remember, these are examples based on real market conditions, correct? So prices which had come to support 2 had shot up, So when prices are coming to certain areas of pivot points, you can, look for trading opportunities around those pivot points as well. they work wonders, correct? Let us look at the next. I hope people were able to understand what pivot points are and how you can use pivot points to your advantage, right, when trading the markets. Let me remove the indicator. 1 minute. Now let us look at the next indicator. We will be talking about Bollinger Band, right? I'm pretty sure many of you are aware of what Bollinger Band. Oops, not this one. I'm very much sure everyone is aware of Bollinger Bands. People have been, have been loving this particular indicator. Some people love it, some people hate it. Again, with trading, nothing is certain, everything is based on probabilities. With so many people looking at the markets and trying to figure out and analyze, everyone has a different personality. And with different personalities, everyone has, some people like to use different indicators, some people like some other type of indicators, some people only look at price charts. So there are so many different types and different personas when it comes to people analyzing the markets. So we talked about moving average, we talked about double moving average, we talked about multiple moving average, we talked about pivot points, we talked about MACD, we talked about MACD and divergence. Look at the amount of information that I'm able to provide. Yes, this information is also available for some people who are asking on the net, but when someone is able to explain it, sorry, when someone is able to explain to you on the real charts with clear examples and illustrations, right, I think it makes it much more easier to understand and much more valuable. So when we are looking at Bollinger Bands, now Bollinger Bands are basically moving averages in their own. The only difference is, as you can see, the midline is the moving average. The way we had talked about moving averages, it is exactly the same. The only difference is now you have something called as an upper band and a lower band, right? Let me just denote it so that people are aware. First we have the moving average, which is right in the middle, then followed by an upper band, and then we have a lower band, right? So an upper band and a lower band is such where now people will be asking, Harsh, what exactly is an upper band and a lower band? Now upper bands and lower bands are basically, differentials of the moving average. Now what do you mean by differential? It basically states what exactly is the deviation between the moving average. How much deviation do you want to keep as a reference, right? It's more or less like a channel. So you have a moving average in the middle, and based on the standard deviation, you have an upper band and a lower band. So if I move the standard deviation to 1, for example, you can see that the moving average, the Bollinger Bands, they get constricted. Now, at the same time, if I'm looking at a moving average, sorry, a standard deviation of 2, I can see that the Bollinger Bands get expanded. And if you keep playing with the standard deviation, for example, 3, the Bollinger Bands get expanded even further. What I'm trying to say is, again, every indicator can be customized, and it is of vital importance to be aware that not every parameter works, right? There is no golden parameter that you put one numerical value and everything will work perfectly. Nonetheless, we will just use a typical standard deviation of 2. Now, with the Bollinger Bands, you have to understand that similarly to moving averages, we are able to identify that if prices are above the moving average, there is bullish sentiment, and if prices are below the moving average, right? So there is bearish sentiment, correct? Now, the difference or the advantage of having the moving averages, correct? The differences or the advantage of having a Bollinger Band is this, that once prices are testing the upper band, there will come a point in time where the prices have to return back to the moving average, back to the midpoint. So let me give you an illustration using my brush. When prices had been going in an uptrend, there came a point in time where prices held and they had pushed prices back to the moving average or the midpoint. Similarly, when prices have been testing the lower band, there will come a point in time where prices will retrace back to the moving average. This is a typical usage of Bollinger Bands. Bollinger Bands are used to take trades when prices are sitting at the upper band or the lower band. And once the prices reverse, they will easily come back to the moving average, the midpoint of the Bollinger Bands. And these work wonders as well for people who are into reversal trades. This works very well, correct? When the markets are going in a sideways, as you can see over here, the prices are oscillating between the upper band and the lower band. So prices are more or less like a ping pong. I hope people are playing, are aware of ping pong, right? It's when there is a ball and there are two slabs at the corner. It will ping and pong. So the ball will keep, you have to keep moving the what you call the handles or the bars at the corner, and the ping pong ball will keep oscillating from one side to the other. The Bollinger Bands are similar in functionality when it comes to, movement of price action in a ping pong manner, correct? I hope people have understood the usage of Bollinger Bands. The Bollinger Bands was discovered by Mr. Bollinger. That's how the name Bollinger Bands had been, come into place. And many, many, many analysts, many traders use Bollinger Bands as well, right? In order to get a more clearer picture in terms of is price sitting at the upper band or lower band, and when prices turn, they can make good amount of profit. All right, so we talked about Bollinger Bands, we talked about pivots. Now we will talk about certain patterns. Right now we're going to talk about patterns. We are done with indicators. I guess when it comes to indicators, the list is quite exhaustive, right? We have, if you go and type in technicals, it is quite exhaustive. There are so many indicators. I mean, there are so many indicators to choose from. Sometimes it gets very confusing. Should I use this indicator? Should I use that indicator? So we are just going to keep it, to the basic of utilizing those indicators, not just, staring at indicators. Based on indicators, since we are already talking about it, let me show you a little advanced. Now remember, this is a little on the advanced side, but I know everyone who is attending this particular live streaming session is wanting to learn more, correct? They want to know more about technical analysis. So this is for you, just for you, right? I'm doing you a favor by providing you with this particular indicator. It's called as super trend. Now with super trend, it gets very clear in a very visual manner that when it is in the greenish phase, let me put a vertical line so people can understand exactly what I'm talking. When the super trend is basically an indicator that is segregated into a green super trend and a red super trend. When prices are in the green phase of the super trend, the general consensus of price is to for prices to go up. At the same time, when prices are in the red super trend territory, the prices generally go, in the opposite side. It is that simple. Imagine the power when it comes to super trends, right? The name of the indicator itself is called as super trend. It shows the trend, it showcases the direction of the trend. So when the super trend is green in color, the trend is bullish. When the super trend is red in color, the trend is bearish, correct? Now this indicator, again, like any other indicator, will have its own, parameters. You can play with the ATR and a factor. Now ATR is the last number of candles, right? If you're putting 10, the calculation will be based on the last 10 number of candles. If you put 15, you will see that the ATR, the indicator will slightly change. And if you're playing with the factor of 3, the bigger the factor number, the more smooth the indicator will, the more lagging the indicator will become. The more shorter the factor, the value, for example, if I put 2, the more volatile it will be, right? So we are going to stick with a standard factor of 3. All right, so based on the standard factor of 3, as I was showcasing you previously, when the super trend is green in color, there is bullish sentiment, right? Prices are in a bullish trend. When it is in the red territory of the super trend, it is a bearish trend. Very easy to understand, and it is very straightforward. There is no putting your mind into what might happen, what might not. Whatever is the color of the super trend, you go with the direction of the super trend. If it's green super trend, it means that the prices will be continuing in a bullish manner. If it is a red super trend, the prices will be continuing in a bearish, will be having a bearish sentiment, right? Prices will be continuing in a bearish trend. So we talked about, see, these are nuggets, these are additional information that I'm providing to you, because I know that I am, I have to make sure that I'm providing you with value, but now I'm providing you with additional value, extra value. Please take advantage of this. I'm sure not everyone talks about, super trend. There are many people who talk about moving average, they talk about MACD, they might be talking about, pivot points, but very few people talk about super trend. So this is a very good tool that people can use. And yes, it is available on TradingView. All right. So now that we have covered up with indicators, let us get back to the next advanced level of technical analysis, right? What we will be talking right now will be based on continuation and reversal pattern. So let me talk what is a continuation pattern and what is a reversal pattern. Remember, today's main focus for these live trading sessions are towards technical analysis of the forex and gold markets. We will cover up the next topic, the we're covering up currently based on the forex pairs, but do not worry, the same thing is applicable to the gold markets as well. When it comes to technical analysis, that is the beauty of technical analysis. It does not restrain us, it does not keep us constricted into one stock market or into the forex market. It can be used on all different financial instruments, whether you're looking at the Indian share market, whether you're looking at the UK share market, whether you're looking at the US share market, whether you are looking at international markets like forex, gold, CFDs. You can use technical analysis on every form of financial instrument. All right. So coming back to the next advanced concept of technical analysis, we will be talking of continuation patterns, right? So continuation patterns are patterns, like the name suggests, which will be continuing. Let me denote it with a line. All right, let me use a trend line, or let me use an arrow. Now, continuation patterns are such patterns that are existing where we have a phase which is currently bullish, as you can see on the charts, followed by a consolidation of price. So for that, let me mark it with a channel, right? Let me just open and get a channel. Give me a minute. All right, let me just use a box. All right, so we have something which is called as a consolidation phase. Now such consolidation phase, all right, so continuation patterns are when prices are going in a particular direction and they take a break, like they consolidate sideways, only for prices to again continue up, right? So these patterns are called as continuation patterns, right? Prices are traveling in a direction. Okay, let me delete it and use my paintbrush. So prices start to consolidate, and the moment the prices break out, that is the time when prices continue in the direction. So these are called as continuation patterns. Let me talk about, let me give you another example from the opposite side. All right. So we have prices which are continuing bearish, and as and how you can see clearly, when prices are, for example, in this particular scenario, the prices were bearish, then we had a consolidation phase where prices sat between, we're consolidating, we're getting narrower and narrower. And the moment the prices, took once the prices had a breakout, that is the time when we had the continuation of a trend. So this is called as a bearish, right? Bearish continuation pattern. And if you looked at the previous example that we had showcased, or maybe I have deleted it, but nonetheless, you get the point. The other example was called as bullish continuation pattern, and when the prices are having a bearish sentiment, a bearish momentum, and the prices are consolidating, like the way I've shown you, they break out, right? So this is the breakout area. That is when the prices will continue down. These are called as continuation. So they're basically continuing in the same direction that was showcased. Now let us look at the other type of technical analysis when it comes to these continuation breakouts. Continuation patterns are reversal patterns. Now, what exactly are reversal patterns? Reversal patterns are such patterns where we had even had a brief discussion on it in the first live streaming sessions. For example, we have a trend line and prices are sitting between the trend line, or if we have to draw even a channel, we can draw a channel. Prices are basically oscillating between the trend lines, right? When it's one single trend line, it is a trend line, but when it is two trend lines which are parallel to each other, it becomes a channel. The moment you have a breakout, such a breakout area when prices had been bearish, and a breakout takes place and gets converted to bullish, these are called as reversal. It's the opposite of continuation, right? So rather than having, continuation pattern is, for example, if the prices were in a bullish momentum and they consolidated sideways, they continued with a bullish momentum. That is called as a continuation. Similarly for bearish, if the prices were in a bearish momentum and prices consolidated and again continued below, these patterns are called as continuation patterns. So the opposite of continuation patterns are reversal patterns, where if prices were bearish in the case of this example, once we had a breakout, the prices reversed. So the prices were having bearish momentum and they got reversed into bullish momentum, right? So these are called as reversal patterns. Similarly, if we are looking at another opportunity where prices were bullish and the moment the prices got taken out, they had a bearish. So similarly, as I had explained to you, the prices are oscillating between the channel, right? And once the prices are breaking out, this is when the breakout takes place. That is when it signifies that the bullish trend has been reversed to bearish trend, right? And these patterns are called as reversal patterns. I hope people are getting a lot of information. I am making sure to provide you with quality information, right? Quality content, because such information is hardly provided by brokers. The main reason people, or the main purpose, or the main function of a brokerage firm is to get clients onto their platform and make them trade, right? But we are providing you with the brokerage platform as well as trading opportunities by making money when the Indian stock market is open. And we are providing you with the third aspect, that is education. You are getting a trifactor benefit of everything. Imagine the power that we are able to showcase to you, and all you have to do is be a part of Dolphin Markets, take our services, be a part, subscribe to our services, and you will be rest assured that you will be making good amount of money. You will be learning and you will be earning, right? When you can earn and learn together, you are getting the best of everything. I mean, there is no doubt in that. All right, we covered with so many important aspects when it comes to technical analysis. We covered in terms of continuation patterns. We covered in terms of reversal patterns. We talked about class pivot points, how there are different types of pivot points. We covered even the super trend, right? I gave you that added benefit of what a super trend is. So there has been a good amount of information that has been shared for today's second live streaming session. We talked a lot about some good amount of technical analysis concepts. I hope I have been able to provide with the value that you are requiring. I hope I have done justice in providing whatever has been discussed today. Make sure to come for today's third training session. We will take it even a notch higher, right, when it comes to technical analysis. Remember, from today's live streaming sessions that we have been having since morning, we started with the basics, right? What is a candlestick? What is a trend line? What is a channel? What is a support? What is a resistance? We started building up the base to the point where we're talking about what is a super trend, what are continuation patterns, what are reversal patterns. So you can see with every live streaming session since today, because today the stock market has was closed because of Guru Nanak Jayanti. So we have taken the opportunity to utilize today's day from shifting our focus from looking for opportunities in the Indian stock market because the markets are closed, to shifting our focus to education, right? Technical analysis education, that too in the forex and gold markets. For the next live streaming sessions, we might start to look more into gold. People would be interested to see how we can analyze better on gold, and we would be talking more in detail on that. So I hope everyone had a great learning. A lot of valuable information has been shared. Please do understand. Again, let me reiterate, the main purpose of having our live streaming sessions is to showcase our potential. When the stock market is open, we provide you with trading opportunities in terms of making money, correct? But when the stock market closes, we shift our focus from making money to learning how to, analyze and then get better in making money. So I hope everyone has had a great time in learning. I hope I have done justice in providing you with valuable information. Let me repeat, please do not miss today's third live streaming session. We will kick it up a notch. We will take it up higher in terms of getting even more advanced in terms of technical analysis. All right. So until then, I hope you all have a great evening. I wish everyone in advance a very happy weekend. But please do come for the third streaming session. All right. So until then, take care. Namaste. And I'll see you later. Bye bye. And take care.